Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to analyze Chamath Palihapitiya's position on the recent GameStop stock. I'll review his discussion on how WallStreetBets Reddit forum is a jab at the institutional investors and how we, the people, as retail investors, are finally getting our fair share at this monumental market opportunity. But this does come with a cautionary tale, though. Is he really holding the line with GameStop, or is he out? And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations. So let's get right into it. So as I bring this up, let me go over who exactly is this guy. Chamath is the possible future governor of California, of course, which is ultimately dependent upon whether Governor Gavin Newsom is recalled. We don't know about that yet, but that's definitely in the works. He was born in Sri Lanka and raised in Canada after his family applied for refugee status. He ended up at Facebook, and in 2011, he left Facebook, where he was credited with helping orchestrate its massive growth. And after that, he started his own venture capital firm called Social Capital. He recently told a trade publication, Institutional Investor, that he's a byproduct of an enormous number of progressive ideals, which include universal health care, almost free basic education, social welfare policy to take advantage of the lowest rungs of society, but give them a path upward mobility. But we're not here to discuss his political views, but his market economic views on GameStop itself and how to make some money, and whether or not we should believe the holding the line position. And I give you a stern warning about game over. So let's go ahead and play the video right now.
Tweeted yesterday that you bought $115 calls in GameStop. Can you tell me what your position is as of this very moment?
Yeah. Can I tell you a little story before all of that, or no?
Why don't you tell me that first, and then we'll go from there.
So this morning I woke up after spending all last night in WallStreetBets reading about all of this stuff. I ended up closing up my position this morning.
Okay, let's examine that statement. He just said he sold his position in GameStop. What about the hold the line HODOR position? So basically, this guy invested in call options, basically, and the options rose in value, and then he immediately sold out and made a quick $500,000. Not that bad. Now let's continue a little bit.
And I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses.
Okay, so let's examine that as also. He's giving that $500,000 profit he made on GameStop, the excursion into the Barstool Fund, which is undeniably assisting restaurants in need. And I love what those folks over there are doing. So let's continue a little bit more.
But I really want to tell you, beyond the $500,000 donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way.
Okay, let's examine that statement right now, and I'm going to bring it back to me because it's just him in the background over there. So yes, this is a pushback against the establishment to beat the Wall Street at their own game. I want to say, though, do you really think that we're really beating Wall Street in the long run when the music stops? What I mean by that is, do you really think Wall Street hedge funds are not playing both sides of the fence right now, making huge amounts of money off the swings where institutional investors playing against the hold the line position to their advantage now that they know what the cat's out of the bag? Yes, I agree that we, the people, caught Wall Street off guard and caught them with their pants down. But I can almost guarantee that the institutional investors are now playing both sides of the fence, and no one is ever to be the wiser. How would we know anyways who's doing the trades? They're just going to be quiet about it. We won it. So just remember that as we go through this a little more. Let's see what else Chamath has to say. Let me bring it back to here.
You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and frankly a better job than a lot of hedge fund analysts that I work with. That's number one.
Okay, let's examine that right now. Chamath basically defends Wall Street Forum, saying that they're doing a long-term fundamental analysis. Folks, that might be the case on the forum itself. Yes, I totally agree. There's a lot of good things that are coming out of those forums, but that has nothing to do with what is going on with GameStop today. He's basically going on a tangent, just defending Wall Street Forums, but not exactly explaining what's going on with GameStop. Okay, let's continue.
The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell.
Okay, let me bring it back over here. So it kind of cuts off right there. But by the way, I'm not really going to rehash 2008, but the 2008 crisis isn't just the fault of Wall Street. People also took out ridiculous loans that they knew they couldn't afford. No income, no doc. If you had a pulse, you got a loan in 2008. And by the way, they were also bailed out by reducing their mortgages also as well. So there was a partial bailout for both Wall Street and to them. And let me say another note about long-term fundamental analysis. That is great and all that Wall Street Forums are doing that, but is not taking consideration GameStop. That is not what's going on. We're not doing long-term analysis on GameStop. It's let's get rich quick by figuring out how to screw Wall Street short sellers, and they basically figured it out. And bravo to Wall Street Forums. I love them for that, So to keep this video short and all, I will sum up the rest of the video because he kind of goes on and on. They basically get into a heated debate on whether Wall Street bets are doing fundamental analysis. And Chamath says short sellers shouldn't be able to sell short over 140% of the stock. And I do agree with him with that. Chamath couldn't explain, though, why there should be a fundamental GameStop price of $400 a share. He couldn't explain that, and he kind of didn't explain it. By the way, to CNBC's defense, there is no fundamental case for a sustained share price for anything that's above around the $20 a share at this exact moment in time. Yes, that's as of this exact moment in time, but that could fluctuate a little bit. CNBC said that the retail investor will be the one that will get screwed in the end. And I agree with CNBC about that 100%. Chamath bags on Wall Street Goliath. Chamath said all these hold the line position folks, that they're smart, but he himself is not holding the line. Folks, Chamath is not going to get hurt in the end. He took a small profit and now he is out. I want to make that very clear. If any one of you know Chamath personally or by Twitter or whatever, because I saw his little hashtags, I want you to ask Chamath, what is the end game over for GameStop, in particular for these retail investors sitting on the stock at currently $300 a share, all the way up to $400 a share? I would love to know your thoughts as subscribers and viewers. Please leave your comment down below. And if I said something that you disagree with, please tell me in the comments that you disagree with me and why. And also, everyone that says hold the line, please explain your end game over exit strategy. So you guys out there, you have the hold the line position. Those with the position of holding, what is your end game strategy? I want you guys to explain it to the rest of us in the comments down below. Well, thanks for watching, guys. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock review updates and recommendations. I'll be out with you in the next video. Ciao.